Hi, Paul.
Hey Nikki, how are you?
I am doing great. How are you?
I'm doing great. Thank you for asking.
What's up?
I'm watching a video series on mutual funds on my favorite YouTube channel, Romance with Finance. I just watched an introductory video on large cap mutual funds which was posted recently on the channel.
I have a lot of doubts about mutual funds, and I am also thinking about investing. Can I ask you some questions?
Please go ahead. It's completely my pleasure to answer all of your queries.
When we talk about large cap mutual funds, a question bothers me every time. Where do they invest?
Depending on the fund's investment strategy, they invest across different sectors such as banking, information technology, FMCG, pharmaceuticals, automobiles, energy, and many others. This creates a diversified portfolio while staying within the large cap universe.
I am a bit confused. I understand the rule that a percentage equal to my age should be invested in debt, gold, and hybrid funds, with the rest going into equity mutual funds. But within the equity portion, how much should I allocate to large cap, mid cap, and small cap funds?
The thumb rule of allocating 100 minus your age to equity only helps you decide how much of your portfolio should be invested in equity. However, that's only the first step. The next question is how should you divide that equity allocation among large cap, mid cap, and small cap mutual funds? The answer is that no single category consistently performs the best. There are times when large cap outperform the market as well as its peers in mid cap and small cap funds. At other times, mid cap funds take the lead, and in some market phases, small cap funds deliver the highest returns.
Who are large cap funds suitable for?
Since no one can predict which category will outperform next, it makes sense to diversify not only amongst the asset classes, however, across market capitalization. That's why your equity portfolio should ideally contain a mix of large cap, mid cap, and small cap mutual funds. There is nothing like one size fits all allocation. Personal finance is personal. The right mix depends on certain factors such as your age and lifestyle, your income and cash flow, your family and dependents, your risk tolerance, your financial literacy, your time horizon, your personal goal, and other factors. Because the fund invests in big companies in terms of market capitalization, explosive growth is generally less common than in smaller companies. Think of its way, it's easier for a small shop to double its sales than for a nationwide supermarket chain to do the same. Large companies often grow steadily rather than dramatically. However, at times large cap outperform the market and other type of mutual funds such as mid cap and small cap. At times it can be small caps are outperforming and at times it's the mid cap. That is why we always diversify. A large tree can still fall during a powerful storm. Similarly, large cap mutual funds can also decline when the stock market falls. However, a large cap mutual fund doesn't usually depends on just one company. It builds a portfolio by investing in several well established large companies across different sectors. So, if one company or one sector faces temporary challenges, the impact on the overall portfolio may be reduced because the investments are spread across multiple companies. That's the benefit of diversification. And a mutual fund within itself has a diversified portfolio of securities. If large cap funds invest in biggest companies, what about companies that are still growing rapidly? Can they offer higher return potential? That's exactly what we'll explore in the next video, which would be on mid cap mutual funds. Because in investing, bigger isn't always better and smaller isn't always riskier without reason. Hope this video was useful to you and you have learned something today. If yes, then